All right, guys. That is going. Okay, figuring the credit. So we'll kind of do a little bit of looking at figuring, but we'll do more work on it Thursday. But if the taxpayer receives dependent care benefits from their employer, which that's becoming more common, a lot of larger companies will allow you to defer or put into a bucket benefits to pay for daycare, okay, or dependent care. And so you're not taxed on those on the front end. And so obviously somebody that possibly knows ahead of time there might be a chance they won't qualify for that daycare credit on the back end might want to do it this way, okay? My sister was one of those. They were in a situation where she has a small business and she was right on the cusp of possibly sometimes claiming a loss and what have you, and so it was easier for them to use this way because they still get a tax benefit. And it actually even was a little more of a tax benefit to do this than it was to claim the credit anyway, and we figured it versus each other. So this is a good way to do it if you know you're going to pay daycare and you know that your company will let you do it this way. The downside is, obviously, yet again, we can't speak to everyone, but some daycares, it's kind of difficult to get them the payments. Because some daycares don't have a direct link to some of the employers to send them the payments. Some of them have different reporting requirements and the way they want to be paid and the way the company delves out the money, so it can be a little different. I think the issue was, one time I heard someone say, oh, well, when I pay it through the company, they put it on some kind of card or something, but then the company wouldn't take it directly or what have you. So you always want to have them make sure if they're going to go this route, they kind of check those ins and outs of how it technically works, because sometimes it can be a little bit of a foot race to do it this way versus just trying to claim the credit if you qualify. We're talking about kind of like when you do a 401k or something like that, or pay for health insurance out of your employer. They put some back for you. I don't know that some of them match it or anything like that, but most of the time this is out of your earnings. You can have it pulled out, and so it's not taxed. And so if that happens, it's going to be on your W-2, okay? And it was box 10. And so it's going to be on one of those smaller boxes at the bottom of the W-2. So we always want to look out for those. It's going to have a certain code with it. So we always want to be careful. Like I told you guys, sometimes those do go somewhere. So you always want to be sure when you're putting those in that we get that code letter with the amount in there. Okay? So when you're figuring the credit, the amount of the actual credit is a percentage of eligible work-related expenses. It ranges from 20 to 35% of eligible, and it's based on your AGI. So if your eligible expenses were that $3,000 for one child, and you only end up claiming 20% of that, is that like $600? If my math's right, it's been a long day. But, so that's okay. I mean, it's not anything, you're not getting, full amount back. But, so a lot of people don't realize that it's not, I get $3,000 back. I spent $3,000, I get $3,000. It's not the way it works. It's a percentage, okay? This is a chart, but this is always on the form. Don't worry about that. Like I said, we will figure some of these tomorrow. The main thing I wanted you to know today is that it's that 2441, okay, that if you pay for it through your employer, that does need to be refigured as well and put into the return, okay, and that's going to roll over onto that 2441.
Okay.
Yeah, so here's an example of it being shown up. It actually has a line, dependent care benefits. So like in this situation, okay, she paid $2,000, but she pulled out $2,500. So she's going to be taxed on that difference. She's not going to get any extra credit. She already got that tax deduction of $2,000. She wasn't taxed on that. Okay, that was pre-tax, is what we say. And so, she's going to owe $500. So when we do the figuring on her form, it's going to tax her on $500. So she's going to have that added back into her income because she did not pay taxes on it. So that's why you have to be careful. Okay, if they let you pull out a whole bunch and then you don't use it all, okay, you're going to be taxed on it because you have access to that income. Okay, so we just have to be really careful when people want to do that. Like I said, I see more people still trying to do the credit and paying it on the back end than I do on the front end. But just know that it is out there for some companies. If it comes in, we have to be careful and look at that. Child tax credit, yet again, you'll get a slide on this. It is up to $2,000 per qualifying child, and that went up. It used to be less than that. I think it was like only $1,000 or $1,200 per child a couple of years ago. that did go up with the new tax laws. So the ones who did fare better overall with the new tax laws were middle class to lower middle class families with children. So pretty much who usually benefits when there's cost of living and cost increases is usually those that already have deductions. So everybody in that group was happy, and everybody in the other groups were like, it didn't help me. It truly helped everybody because a lot of the tax rates were lowered, but it's just, then in other sections, things were different as well. So kind of was a mixed bag. But that was one thing that did go up is the per child, what you get on that. If you can't use the entire credit on line 12A, you may be eligible for the refundable portion. Okay, there's another one of those. We've got non-refundable, and then over here it says
it is refundable.
And then we have over here
additional child.
may be eligible to be refundable. So we're kind of give and take. So this is actually another one of those widely used ones that can have two parts. Okay, the additional child tax credit is directly tied to this one. Okay, and both of those went up last year. So that's the way to just remember it is there's child tax credit and an additional child tax credit. Because we think you need more, right? I'm not even going to lie, I got 4 kids, so this benefits me. I'm not even gonna lie. It really helps us. So, but then I get to employ all you guys, so see, that helps. And it literally, I mean, you can imagine having, usually, we'll have to see in here, but usually on these, I don't recall if the child tax credit maxes out. EIC maxes out at 3. I don't recall if child tax credit does. But yet again, think about this. If that's $2,000 per child, you must have a really big, right? If this part's non-refundable, you're gonna have a big tax liability to use up all those if you have multiple kids, right? So then they pump it over here to additional child tax credit, and so this can be a really good bump in someone's tax return. But the base child tax credit is non-refundable, get you at 0. There are some situations where you can get the addition, okay? $2,000 for each child. You may be able to claim the remainder up to $1,400 per child, okay? That additional is up to $1,400. That is direct. This is more of a set amount that you use or don't get to use. This sometimes is a percentage, and I don't know if that also changed when they went up to the 14, but because it says up to 14, it's usually income based. Okay? So just know that one can fluctuate. This one's usually $2,000 per kiddo, up to the point you can't use it anymore. And then it flops down to the additional. Okay? To be eligible to claim the child tax credit, you must have at least one qualifying child. Child must be a dependent. Child tax credit is available for all filing statuses. Yay! Okay. So that was funny. To be eligible for the child tax credit or the additional, the child must have a valid social. Okay? In the past, some of these credits you could have I-10s and other things, but it says this for a reason. Okay? Valid social. So they've changed up some of the credits over the years. This is another one. It doesn't mean they can't be dependent, but you may not qualify for extra credits. Okay? Yet again, believe it or not, in this office, I don't see a lot of those clients with I-10s and other things. We get them every now and then, but I don't see them a lot just because a lot of them now use the IRS because they need to be renewed and things like that, and we don't do those here. So, or an EA or a CPA have to do those now. So we don't see a lot of those here. We can definitely do returns if they only have an I-10, but if they're expired or we have to create new ones or anything like that for anyone else on the return, they have to go through a CPA, an EA, or the IRS. And even then, not every CPA and not every EA that's an enrolled agent, not every one of those will do that, but they just don't use us. I'd like to say I'm super nice and I have some kind of list in the back, but I don't. Because I used to have someone that we used, and they got out of the business. And that was like last year, so the year before last. So I don't really have anybody that I refer to. Also, as of 2 years ago, only the IRS did those. So it's kind of changed back and forth. The year the person I know got out of the business, only EAs could do them. Then last year they said the IRS in Fayetteville started doing I-10s again. And so now I don't know who does them, but
Just make
I
sure
would
you
send
send
them
them
to the IRS first.
to Vantage Drive because everyone goes to Millsap.
Yeah.
IRS moved away from there in
Oh,
May,
yeah.
so
Oh, yeah.
everybody keeps sending people to that building.
Which building?
Millsap building where
Really?
Black Hills Energy is.
Mm-hmm.
Yeah, they used to be on the first floor. And so, but
Yeah,
they
I
moved
know what
in
you're
May.
talking about.
Yeah.
Did they move closer to the Social Security office?
And, they're not as far down, but they're actually on Vantage now.
The IRS is?
Uh-huh.
Wow.
They're
Because
kinda
last time I was
midpoint.
over there, they were, that shows you how long it's been
They're
since
kinda
I've been.
midpoint.
It's probably a silly question. The CPAs, do they have a reason to want to work for Liberty, or they just don't want people?
CPAs are, we go through Liberty to become a third-party authorized person. CPAs have a different route because they have like their CPA license, so it's different. It's different. We're not the same. And I don't know if it covers that in the tax prep chapter for preparers. Used to, it did. In our trainings, it would cover the differences. And I can stop and talk about it, and I can get y'all some more details on that. But CPAs have a different level, okay, because of their training, I guess you would say, and their certification. It's just a little differently. I like to say we're like the low man on the totem pole. That's my joke. We're down here, so we can do family tax prep and basic income taxes. As your CPA and get more certifications through CPA, you have more requirements as well. So they have to do like continuing education every year that has to be documented. Enrolled agents also have to do that. So enrolled agent is kind of like that go-between. They're kind of almost like the route you take if you're not a CPA. You get your enrolled agent license, but in the last few years, we could do almost just as much as some of them could do if we were trained and we had the experience. We could do those. The IRS is kind of tapping down on some of those things as far as security purpose-wise, and so even for EAs and CPAs, it's becoming a less of a differential because of security issues. So, yeah. But they're always going to have preference and be able to do more just because they have more training than we do in more complex situations. So like tax law, things like that, audits. So basically we can help someone with what's called a soft audit. So they get a letter sent to them and the IRS just wants documents. That's what we can do. As far as representing them in court, things like that, we don't do that. So that would be an EA or a CPA.
You're like,
Yeah, yeah. We're talking big time things, not
It's like,
basic stuff. Which there's still plenty of things we can do. Which is that's the thing is it's one of those things. It's like a cost versus reward. I actually have my EA books from 2 years ago. The first year I bought this office, I was like, I'm going to do my EA, and then I got my books and I said, I'm too busy to do my EA. And somebody else, it was kind of the same way I talked to last week, and he's like, yeah, I think I'm looking at this. I'm like, I just need to pay somebody to go do that, and that's kind of been the go-to thing of a lot of franchisees. They're like, we have too much to keep with already. We need to just have somebody else go do that. And that's the thing too with being an EA and a CPA is, like I said, there's more things they can do, but then it's just getting that business. So you still have to let people know, and it's such a specialized field that I know if you're EA and CPA, I think you can register on the IRS website, so it's a little more known what you do. That's what I was also telling the other group today about the testing part of everything is that, like our competency exam is based around the IRS had come up with a national exam a couple of years ago. But then Congress said, no, you can't mandate that. These are individual businesses with individual training programs. We're not going to let you nationalize the tax preparation industry. It's not a one-size-fits-all because every state's different. California and Oregon and some of those states, New York, have more stringent rules and regulations than we do here. So they even have to do like state training, like organized state official register with state type stuff. We don't have to do that here. And so, Congress said, no, they're not your employees. You can't mandate what they're doing for the most part. You can still say they have to have an identification number so that we know Avetta prepared that return, but you can't go tell Avetta what she has to do every year to train. Leave that up to the individual businesses who that's their employees. Now, basically the only thing that any of us were getting in return was like I kind of joke with it. We got put on the goody two shoes list and we got our name on the IRS website. That's kind of what, if you pass their test, that's what you get. You get to say you're registered with them in this other section, and they put it somewhere buried on their website. That's what you actually got.
Buried.
Yeah.
The reason why I brought that up is because a lot of the Spanish-speaking community, they don't have social security numbers. They
Right.
might have just those I-10s.
Yeah, yeah. And it's a lot, I'm not going to lie, it's a lot of work because, well, they even changed the way they do the I-10s. Years ago, to get an I-10, to be able to just file a return, if anyone on the return had wages, you had to send in all your original documents. You couldn't just go to somebody. You had to mail in, like, original documents, like passports and identification cards. It was
risk.
ridiculous. It's a big risk. And so it was like a big paperwork, I don't want to say nightmare, but it was a lot of stuff, okay, to have to do. And so what they did about 2 or 3 years ago was they said, okay, we are going to start letting certain enrolled agents and certain IRS offices be like I don't even remember what they called it, I have to go look it up, a certification office or something like that we're going to let them say it's all good. We're going to let them review it locally so that we don't make people go through that much work to get their I-10 information verified. And so then that stopped the fact where you had to mail in all these heaping documents. Cater that with a lot of the I-10s were starting to expire. So there's a certain process you go through to renew your I-10. So that's another thing that we can't do. And so, it's just a segment that we can't help. So I always say, hey, if they come in the door and they mention I-10, we need to make sure what that situation is because we just can't help them. It's just not something we do. It's not that the demand's not out there. It's just it's cost versus reward on it. A lot of times, too, depending on the situation, a lot of, like you said, it's very networked, community-driven. So I know in Siloam, a lot of the Hispanics over there go to like one person, right? It's very community involved. They stick with that one person. They trust that person. Because those are mom and pops, the price tends to be a lot less than what we would have to charge. Because I have to employ people. I have to keep the lights on. We have a franchise. We have to pay for that name. We have to pay for stuff like this. And so we just can't, there's only so much we can do when it comes to discount pricing. And so if you're used to getting all this for $50, it's like we don't even do basic returns for $50 anymore. I can't do I-10 and send off and, so that's another thing we've run into with it is that's when I say cost versus reward to go get that training and be at that level. Eventually, with some of the new products we're going to have because we're going to go to year round, it may come with it. It may automatically, raise that side of the business to where we're able to do those things. So I'm not saying it won't happen, but it probably will eventually come with it. So we got about 1 minute. So we'll get to 60. That way we can get an even round number here. It may just all be. Child tax or qualifying child. We've kind of talked about qualifying child already for filing status. Very similar, okay? Kind of the same thing. It's got to be a child, right? Under age 17. So to get that tax credit, under age 17 versus some of the other ones were 19. Remember the 19-year-old? So this is to get the child tax credit. Okay?
Which one was under the age of 13? Which one was?
That was the dependent care. Yep. Yep. And this is what I'm talking about, guys. When you get to these nitty-gritties, to remember all these rules is almost impossible, so you'll have to double check yourself on the competency exam. I wouldn't risk it. You can Google this super quick or have it turned open super quick when you see it. So definitely some of these, there's no reason not to just give a double quick check. You don't want to miss an easy one. Yet again, our software qualifies for you on all this. I mean, you're going to know by looking, they put it in the dependent section. This was my dependent. Now, we always want to question it, but the software's going to flag you if you put it in and it's quirky or anything. Obviously, we know somebody under age 17 did not provide his own support, more than likely, so it's not even an issue. We talked about, had to live with you but could be gone for certain circumstances. Have to claim the child as a dependent, did not file a joint return, or only to claim a refund, which, yet again, only to claim a refund. So, under age 17 could work, right? Do what?
No, I'm just saying, this is just like on this question here for the qualifying.
So under age 17, they can work, right? But they probably didn't do half their, so they only file. And this is joint return, so if somebody's 16 and filing a joint return, woo! Okay. That's the situation there. Child must be a citizen or resident or a U.S. national, must have a valid social. Okay, so like I said, in years past, you could get some of these credits with I-10s. got to be a valid social. So that's changed over the last few years. Okay? And I'll print some of this out for you guys, but if you'll notice, a lot of these rules are the same except the age. Okay, so that's a big factor on a lot of these credits, even on the EIC when we get to that. You know, they're going to start kind of probably mumbling in your brain a little bit, but qualifying child who was born or who died during the year is considered to live with you. So we've already talked about that. This is what I was talking about, those credits, when there can be a split. And remember, we were talking about custodial and non-custodial. I will print this out for you guys so you can see the way that works. There is still a split. Most people don't do the split because it is a little bit complicated, and you do have to have some communication to do it. Because one of you can claim certain things, the other one can claim other things. If you don't communicate with them and their tax professional, it can kind of become crazy. And I've only seen like 2 or 3 people do this throughout the years where they weren't just literally giving them everything every other year. The splitting of them is a little more tedious. So let's see. And I will print that out so there's no issue. Yet again, I think we talked about the 8332 early on in one of those other ones. Child tax credit. The biggest thing to know about this is that amounts have changed. Okay? They used to be super low, like 100, 125.
Yeah, that's what I
Okay,
remember.
now it's like almost 500,000 can get child tax credits. Filing separately, 200,000. HOH, 200,000. So this was another change they did with tax laws, which I think was a good one. Because there was people that were just at that threshold that, you know, in a higher income area, higher tax, higher, I mean, we're low, you know, you can live here for a decent amount of money. But some other places where cost of living is higher, you know, some of those people needed those credits, you know. 6 figures goes a long way here. It don't get you nowhere in California, right? So, or big cities. And so this was very, so this was very needed for some of those families in those areas that were just over that gap. Because I want to say it was 125, 150 back in the day for a married couple. So it was, you know, maybe even lower. It was not that high. So this is a big thing on child tax credit that helped a lot more people last year that weren't used to getting that credit. Okay? So we will finish up some of these credits, and then we will actually put them on paper so you can see them on a return, and you'll kind of see how that works. And then we'll be about halfway through, and then we'll have probably about 5 or 6 more classes-ish, kind of in the next 2 to 3 weeks. We'll have to kind of talk about Thanksgiving, how we want to work that. We probably will at least have 1 class that week. I know some of you might be going, that's okay. We will record anything we do. It will more or less be like a review. So it will be what we've not kind of covered. If we still need 1 or 2 after that before we test, we'll do them. We might pop in and do a Saturday or something, or a Sunday afternoon. So be looking at that. Probably not the weekend before Thanksgiving, because some